well spoken on this issue. Darren, come on up. Everybody give Darren a round of applause. I've seen Darren speak several times and he dazzles the audience. So I set a high standard.
Mic check. Good. So, full disclosure, my mind right now is still on salmon fishing in Alaska. Every year I unplug for 6 or 7 nights, put the cell phone away, get out of coverage, head up to Alaska. And I got home, did an 8-hour turnaround here to come to the Smart Cities Policy Group. So we're going to try and tackle insurance in about 15 minutes, plus or minus. Everybody should have a handout on their table, which I put together essentially for this conference. So we'll get into that in a minute, and it basically covers everything you need to know from an insurance perspective in regards to short-term rental regulation. Often misunderstood, confusing topic, and essentially cities all across the United States are putting an insurance requirement in virtually all the ordinances that are being put out. The issue is most people who are writing these ordinances have no idea about insurance. I mean, it's a very complicated topic. It's essentially contract law. You have a 90-page document that tells you what's covered and what's not covered, and yet we have city council members or government officials, no offense, but telling short-term rental owners what type of insurance to buy. And that's a real issue. So we'll cover that in a second, and everything's in the brochure for you guys. A little back history on proper insurance. About 10 years ago, well, my whole professional career has been involved in insurance, which is going on 20 years now. And like a lot of other kids who dream about being an astronaut, fireman, like Justin, I dreamt about insurance policies. Not exactly, but it is good business, and it's just something I fell into right after college, and I've been doing it now for almost 20 years. So 10 years ago, I was trying to figure out how do you best insure a short-term rental property, and it turns out it's not that easy. I call it the Airbnb effect, but essentially, when you're thinking about insuring a property, a lot of it comes down to the use of the property. What is the property being used for? And forever, we've essentially had 3 options to insure a dwelling. So you have a homeowner's insurance policy. It's been around forever. It's designed to be owner-occupied. Most of you probably own a home, or many of you live in it. You buy a homeowner's insurance policy. It's underwritten and designed for an owner to live there with their family, personal liability, building coverage, contents, done. That's option 1. The second option is what's called a dwelling landlord policy. That would insure a dwelling primarily that's tenant occupied. So many of you may own properties, and actually, plus or minus 2 million properties on a short-term rental basis in the U.S., probably 80% of them are insured on a dwelling policy. But way back when it was created, it was designed for a tenant use. So you rent a property to somebody, they live there, you're the landlord, you buy a dwelling policy. Option 3 is a business insurance policy. So you own a coffee shop, you own a grocery store, you obviously buy a business insurance policy. So that's it. You really only have 3 options. Now let's think about the Airbnb effect. We have people who are living in their home and they're putting tiny houses in their backyard to have people come and short-term rent. We have people who own a duplex and they live on one side but they short-term rent the other. We have people who live in a home who rent out a bedroom on Airbnb. We have traditional vacation rental investment properties. You buy a second home, you turn it into a vacation rental. So we have a lot of moving parts here, and people aren't going to necessarily buy 3 insurance policies, because if you think about it, most short-term rental properties have both personal use and commercial use. So it's a very tricky thing. Well, it turns out the best way to do it is on a business policy. So that's what me and my partner did, is we started with a business policy. We endorsed it, crafted it. We need business income, commercial liability, building, contents, bed bugs, backups of sewers and drains, on and on and on. And we crafted this very comprehensive policy. But fundamentally, from the ground up, you cannot insure all those occupancies without a business policy. The way that I explain it is homeowners insurance just doesn't have the horsepower behind it to actually cover commercial activity. And in 5 years, I'm proud to say that we have almost 40,000 clients. We earned an exclusive endorsement from VRBO HomeAway about 3 years ago. But again, 40,000 of 2 million, this is a real issue. And there are other companies out there like mine who insure short-term rentals as a business policy. So let's get into the meat and potatoes. So I want you guys to open this up. And I want you to look at the very top here. So this is a common ordinance example with an insurance requirement. We see this in virtually all the ordinances and legislation across the U.S. Each owner shall maintain at least $1 million in liability insurance on the short-term rental for the full duration of their license term and provide proof of the same to the city. This is verbatim. Well, that sounds great to me. $1 million of liability insurance, provide proof to the city. Well, we're really doing a good thing here for the owners, right? No, wrong. Concern number 1, type of liability insurance. Okay, this is huge for everybody in here who has an interest and is involved in writing these ordinances. There's 3 types of liability insurance. You have to define what type of liability it is. So first is personal liability, which is in here. You can read about that. That's found on a homeowner's policy. The second is premise liability, which is found on a dwelling policy. We covered that. And the third is commercial general liability, which is found in business insurance. Personal liability is no good. It excludes business activity. So let's say you own a home, you're really good at woodworking, you decide to open a woodworking shop in your garage, somebody comes over to buy a piece of furniture from your garage, they slip in the driveway, they get injured, they sue you, you call your homeowner's insurance carrier, they go, hey, what happened? Oh, a guy slipped in my driveway, what was he doing there? Oh, he was coming to pick up a chair. I do woodworking in my garage. Guess what? That's business activity. It's in relation to business activity. There's no coverage under personal liability. So really, the $1 million question, is a short-term rental a business or is it not? I've been fighting this for almost 8 years. There's a lot of people who say, no, it's not a business. I like the old days when we flew under the radar and managed 500 homes and didn't have to worry about insurance. Well, the issue is Airbnb and VRBO is now in every community in the United States. And we're talking about taxing them, requiring a license, safety inspections. It's a business. And under insurance, anything $2,500 or more annually is considered business activity. So it's 100% a business, so personal liability is no good. Premise liability, 80% of these properties across the U.S. have premise liability. Okay, but the issue is the liability doesn't extend beyond the premise. So if you have someone slip and fall or fall down the stairs or off the bunk bed or drown in a pool, that was bodily injury that happened at the premise. But what could be an example of something off the premise that could be tied back to you as the vacation rental owner. The example I always use is the dog bite. So you have tenants that come to your property, they bring a dog, they walk their dog bites the neighbor kid. The neighbors not only sue the guest, but they sue you, because you're the owner of the property. Well, guess what? That was bodily injury that happened off the premise that can be tied back to your business. There's no coverage under premise liability. It does not extend beyond the premise. So the golden rule here, you have to define the type of liability as commercial. Quickly, concern number 2. Show me proof of liability insurance. So I was looking at Justin's photo of the 3 people in the city there. Well, what does that mean? That could be a napkin, an email from my agent, a copy of the insurance policy. You have to define proof. So in here I write certificate of insurance, COI. That's a commonly used document in the industry. If you go to get a loan for a property, you buy it through the bank, they want to see a COI, that your property is insured. So you have to put that in the ordinance. It's very simple. Don't say proof, say show me a COI, certificate of insurance. And concern number 3 is a bit reaching, but if I was in a city and I was involved in creating the ordinance surrounding insurance, I would absolutely require that the owner add the city as additionally insured. Because I promise you, precedent is being set now, and if you're going to go out on a limb and write an ordinance and tell people what type of insurance to get, you have a massive E&O exposure. If they don't have coverage and they come back and they say, oh look, I did exactly what the city said, that's a big issue. Myself, my competitors, there's about 5 to 7 of us in the industry, this is a non-issue. So let's just read the amended language real quick. Each owner shall maintain on a short-term rental for the full duration of their licensed term a minimum of $1 million in commercial general liability, define it, and add the city as additionally insured. The owner shall provide proof of both via a certificate of insurance. So that's it, honestly. But if you start to dig and you look at all the different ordinances being passed, most of them do not define it. They don't define the proof. They don't add the city as additionally insured. So just to wrap up here, a quick summary, another rule of 3, which I really like for insurance requirement in local ordinances. Number 1, I think all of us would agree, it's just a good thing for everybody to have the right insurance. And again, proper insurance is not the only provider. Berkshire Hathaway has a program, American Modern has a program, CBiz has a program. There's plenty of carriers out there that will sell owners business insurance, commercial general liability. So it's just a good thing. Number 2 is underwriting. Back to Justin's example, we had to learn as we go as well. And any bunk beds now, we require a railing because we had a kid fall off a bunk bed. We had stairs that go down, have to have railings on all stairs, fire extinguishers in kitchens, etc., etc. So by having this requirement, you're essentially vetting these properties, and business insurance comes with higher underwriting restrictions. So it's really, really good. And then number 3, it costs a little bit more, and that will eliminate a lot of non-professionals. If you have somebody that comes down to get a permit, and they say, I don't want to get the permit because my homeowner's is $1,000 and CGL is $1,500, well, guess what, dude? You're in business, and that's a business expense. So it's really good for everybody. I really appreciate Matt inviting me here. And I want you guys to keep a copy of this because essentially everything you need to know surrounding insurance is in this brochure, and you can reach out to myself and my staff anytime. We're an open book, and appreciate your time.
Thank you so much. Next 2 folks, you got to give it to Darren. How many people do you hear give props to the other competitors in the same space? That's really cool. Also, he looks like he's related to the Baldwin family, doesn't he? Folks, I wanted to bring up two friends of mine who are very well schooled and have been discussing this issue for a long time. The first is Nicole Mead with Hush Blackwell Law Firm. Nicole Mead worked on this issue here in Austin and also Brandon Schultz and other nearby cities in the region. She's a lawyer and she has been discussing this issue, different elements of this issue, and creating policy around this issue. And then Greg Holcomb. Greg is the Vice President of Government Affairs for the Vacation Rental Management Association. VRBO is also a sponsor. We appreciate their support. And Greg has been working on this issue, policy issues related to this around the world for probably 4 years now, 5 years. And is a former city council member from Lorain, Ohio. I was trying to remember. And also, tell us your role with the city in Virginia.
Yeah, I was town clerk of Occoquan, Virginia.
Occoquan, the home of the world's largest pecan. No, that's Greg Holcomb, Nicole Mead, Darren Pettyjohn. Let's fire it off. Do you guys, any points for Darren before we get started? Any questions? I'm going to open up for questions. Yes, Nicole?
I'll start. Hello, everybody. Glad to be here. So, hearing your presentation and thinking about these insurance requirements, and we deal with insurance requirements imposed by governments all the time, I would just like to have some discussion around the concept of the cities and regulatory authorities not being the entities requiring this insurance. Is it right for the city to be an additional insured? Is it right for the city to be imposing upon, if we do deem these to be businesses, imposing upon those businesses the requirement that they carry a particular type of insurance or amount of insurance?
Great question. Being self-serving here, you definitely know. And here's the reality. Here's the reality. No, absolutely not. I mean, if you don't go to college, you typically either become a real estate agent or an insurance salesman. No offense to the realtors, but no. In honesty, they shouldn't. A lot of cities should not get involved. But the flip side of that, if you do it correctly like that, it does create a barrier to entry, which eliminates a lot of the non-professionals. It does have a higher level of underwriting, which parallels and partners with Justin very well with inspections of these properties. And it's good for the neighborhood, it's good for the community, because nobody wants to see a house burn down from a kitchen fire and to sit there for 2 years because someone didn't carry the right insurance. So I think in its infancy and as these ordinances are being created, there's an argument both ways. But for the sake of my business, I'm going to say it's a good thing.
I suspected.
Darren, I actually have a question for you as well. For all the public officials or policymakers don't get any ideas out of this, but there is a small trend across the U.S. happening where cities are recognizing for taxation, property taxation purposes, that a vacation rental or short-term rental is a commercial use while still being zoned residential. And when that happens, people have lost their insurance policies. They've been backed. Have you seen this? Do you have any thoughts on that?
Yeah, that was in Colorado Springs. Well, that's what I saw on Main Street. And the property tax rate, I believe, they were considering from, I believe, 6%, and then commercial property taxes like 20%. From an insurance perspective, it doesn't matter to us, because what we're underwriting and what we're insuring is the building, how old is the house, what type of wiring does it have, is there a swimming pool, liabilities, swing sets, zip lines, et cetera, So really, from our perspective, from a premium standpoint, you charge a premium for risk, that has no effect on us. I think what you might be seeing is banks, a lot of people have escrows on their property, and so then when they send in business insurance, that creates a red flag, and they go, why do you have business insurance on the home? We financed you as a second home, and is this really a business? And the funny thing there is, when we send our EPI, evidence of insurance, to banks, the only interest a bank has is in the property itself. They have no interest in the liability. They loan you the money, and if the house burns down, they want to make sure the house is rebuilt. So we don't put anywhere on our documentation that it's a short-term rental. They want to know building coverage, special form, underwriter, done. So we really haven't run into any issues with that. But other people probably would if they didn't have a savvy insurance agent.
There was actually in the state of Montana this past year amended their, they have very lax HOA rules, and they amended a portion of the HOA rules because of the insurance issues for people buying an HOA, doing short-term renting, and then after the fact, the HOA says, no, you can't short-term rent. And because of the mortgage issues and insurance, people were getting cut from their coverage. But now they're grandfathered in. So the HOA can still ban them going forward, but the people that were doing it were still allowed to do it for the insurance purpose.
Copy.
Any questions from the audience? Yes, ma'am.
So a lot of cities are actually trying to roll back who can do a short-term rental. Some of the cities like Santa Monica are requiring that it only be owner-occupied. Would there be a difference in insurance if it was actually an owner-occupied or an occupied house versus a whole house where the owner of the property isn't on the site?
There is yes, she asked if from an insurance perspective, there's a difference whether a property is owner-occupied or if it's a traditional vacation rental where the owner is not on site. And yes, because owners turn off water, which is great, and that's the second largest insurance claim is water damage, broken ice maker, broken water pipes, etc. So we actually really like that. From a property rate standpoint, you're actually going to pay a little less if it's an owner-occupied property. And then from a liability perspective, it's actually a little bit more expensive because you have the scenario of who spilled the milk. So if we think of a traditional vacation rental, you're giving temporary possession of that vacation rental to somebody for 3 days. One day after they check in, they go to the kitchen in the middle of the night, they spill the milk, they're temporarily occupying this property for 3 days, it's theirs. They slip and fall on it the next day, well, that's your own dang fault. You spilled the milk. When you have commingling between somebody in a bedroom plus somebody who rents their room, who spilled the milk? Did the owner get up and then you have some sexual assault issues? In all reality, a lot of policies exclude sexual assault and assault and battery. The host protection that Airbnb provides for everybody, they exclude that among a lot of other things. So from a liability perspective, more expensive. From a property insurance perspective, less expensive.
Can I address something as well, not insurance related, but what was brought up about the owner occupancy versus non-owner occupied? So I'm obviously have a hat in with the Vacation Rental Management Association, which are primarily non-owner occupied units, but they're management companies of those units. So a member of ours, Claire, and Steve Milo over here, who are property managers, they don't necessarily own the homes that they're renting out. They're renting out other people's homes for them. And so there's often a question about safety in general when it comes to owner-occupied versus non. And if you read pretty much Google short-term rental regulation or law, look at any article that's out there in the media, and they'll immediately say, oh, owner-occupied is safer than the non-owner-occupied. The problem that we have with that is there's an issue that the property management company has two customers. They have the person staying in the home, and they have the owner of the actual home. And so by having those two customers and having to weigh back and forth, like, I want to update the kitchen, and the owner doesn't want to pay for the update of the kitchen, but the guests stop coming because the kitchen's outdated. And some of this stuff comes along with the safety issues, but that management company ultimately is going to try to ensure that that property is upkept, that the safety issues are rectified, that the guests in some situations, a lot of companies do background checks on the actual guests coming in. Are people doing that in an owner-occupied unit? Not necessarily. So from a safety standpoint, the data just is not out there that one is safer than the other. However, anecdotally, when you have a company that often has to 20 states, you have to have a broker's license to even rent out someone else's home. You're going to the real estate commission, you have a business license. They're findable. You can find that management company in the community, as opposed to trying to figure out who's renting out the one apartment in, 100-unit apartment complex.
I wanted to make one other point about the owner-occupied scenario. We have had more than one situation of angry neighbors who don't like the fact that an owner at some point rents out their home and have used the fact that have done open records requests to get copies of the certificates of insurance and have used that fact to try to void the owner's homestead exemption. So despite that being completely counter to the law in almost every state, we are definitely seeing that happen. So, it's interesting that you really have to have this commercial sort of different kind of insurance policy, but I've also seen that be used against people who are sure to do occupy their homes full time and rent out, very sporadically.
Any questions? Yes, sir.
We do. Gentleman was asking about golf carts and specifically in resort communities and whether liability coverage will extend to that. And auto excludes it. You're not going to find coverage under your auto insurance. And we actually did write a specific endorsement to our policy to extend our commercial liability to the use of the golf carts, but only if they are non-licensed for road use. If they're licensed for road use and people are buzzing around, no coverage. If they're used in like a resort in South Carolina and a lot of these places we see these resorts, we do extend coverage to that. But it's a very specific endorsement. And actually, I believe we're one of only companies in the United States doing that. Bicycles are not excluded. So the way that you have to look at liability is everything's covered unless it's excluded. And the reason that you can't call State Farm, Allstate, Nationwide, USAA, Liberty Mutual and say I have a vacation rental home and I would like to buy a business policy is because the coverage is too broad. Trampolines, zip lines, bicycles, everything's covered unless it's excluded. And so the reason we're able to do it is because of the online listing, because we see every VRBO and Airbnb listing or on a property manager's site, we see their amenities, certain things we accept, certain things we don't. 1 out of 5 clients we turn down. We do extend our liability to the bicycles. We write policies, but you're required to have helmets, and part of your post-stay inspection needs to be that the bicycles are on the up and up.
Ma'am, tell me where you're from.
Cayucas, California.
Cayucas? Cayucas, where is that?
It's right in the middle of California.
All right, Cayucas. Cayucas, California, go ahead. That's my Larry Camp. Yes, ma'am.
My question is, has anybody looked at the possibility of charging the guest on a per reservation for insurance, like maybe with car rentals?
So, and can you repeat that question?
She is asking, is anyone charging a rate for insurance to the guest to help pay for the commercial?
For staying kind of like.
I believe it does. It's based on how the guest pays on a reservation for their insurance.
Mm-hmm.
I don't know what the policy says, but it's just a thought. Homeowners who have their own insurance, but the guest would pay. Kind of like how you.
So what happened with Vacasa, we worked very closely with them, is they were having issues verifying the insurance coverage of all the owners. So if you manage 10,000 homes, you want to make sure as a property manager that all your owners carry the correct insurance. Almost impossible to do, and property managers get their liability coverage through the owner's policy by being added as additionally insured on the policy. So what they did is they created a blanket insurance policy for liability only, and I think 10,000 of property damage. And when you sign on with Vacasa, you're automatically enrolled into that for $8 a night. The only way to get out of that is to show them a COI of commercial general liability. So that was the reason that they did it.
Great, wonderful. Any other questions? Yes, ma'am. Shireen Fisher from Austin, Texas.
One more question. Just sitting here, there's a lot of the use of the word commercial and residential that often creates a lot of controversy when you go to City Hall, when you go to insurance companies, you go to property owners, you go to travelers. And then I sit here listening to a panel where it's all related to the same industry, but yet the same terms are not being used. You are saying it has to be commercial insurance, but yet in court cases, it says residential use. You know, these are in residential neighborhoods, zone, single family, but yet they allow short-term rentals. So it's very confusing. Because if you ever see the industry aligning in those terms, because they're used all over the map.
Sure, everybody heard that question. Shireen has a booming voice. She basically said, we really haven't gotten to a place on this panel or in the world where we're consistently calling these commercial uses versus residential uses.
Yeah.
And do we see the industry sort of getting aligned around that and using consistent terminology? It's probably a better question for you, but just from my perspective, I think it's a fight that probably will never be over. I think that you are exactly right that the case law has upheld that this is a residential use. But I think what happens with regard to your liability and other insurance policies is that you're entering into a contract with the insurance provider, and they can agree or not agree to insure whatever they want. And so they are deeming the rental of the property to be commercial. And, you know, one thing I don't know that Darren touched on, but that, you know, there are situations where if your insurer under a regular homeowner's policy realizes that you are renting, they will cancel you. And so, you know, under most policies, they have the right to do that. So I think it is an ongoing legal battle about the use of those terms. I think different cities, you know, acknowledge and call it different types of uses. Austin even is really in its one code, kind of both places, calling it commercial and also calling it residential. So I just don't know that we'll ever, because it really truly is like an unusual hybrid. It's both, and I see the arguments for calling it both.
So we have our perspective is that, one, there's the zoning. So zoning is separate and away from what the property is being used for. And my question back would be, why would a long-term residential property that I'm renting on a yearly basis or month by month, which can happen in any state. So if it's over 39 days, why would that be considered residential? But at 30 days, it's all of a sudden a commercial usage in its own commercial area. When it still has a bathroom, it still has a kitchen, it may have a basement, it's all the amenities that a normal